Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really quite interesting out there currently. You start to see oil dip back below that sort of $40 now. But interesting comments from the Fed this morning with Chairperson Yellen on the tape saying that the Fed is really very data dependent in terms of rate increases going forward in the US. Now we're sure to see a further test of that with the US non-farm payrolls coming through. And it's interesting to note that in the US over about the last year or so, the US has been creating just over 200,000 jobs every month. Now that is really pretty astounding and certainly showing an economy that is going forward and there's reasonable growth out there. And what that's starting to see now come through is a little bit of sort of wage push inflation coming through as well. Certainly, inflation has been a sort of a bit of a dirty word, and central banks have been really sort of trying to stamp down pretty hard on that. But in the current environment, they're trying to get a little bit of inflation coming through into the economy because certainly inflation really globally has remained persistently low for a very long time. Part of the reason for that has been obviously the falling oil price. It really is quite interesting with oil sort of below this sort of $40 a barrel now. So the analysts are still looking for a sort of a rebalancing coming through and sort of in terms of the sort of supply and demand, and still looking for oil to be between sort of $45 to $50 a barrel by the end of the year. And to give some idea on that, just here in New Zealand, the cheaper oil prices, is expected to put around $1 billion extra into the economy over the next sort of 12 months. It's really a pretty astounding number, and that does give households a little bit more disposable income, which hopefully will be spent, and sort of continued growth going through in the economy. As always, New Zealand are really looking for those sort of income options. And there are plenty of options out there to sort of term deposits. Bonds coming through at the moment are sort of 5 to 7 years and are sort of just above 4% or just below 4%, depending on the duration. Where some of these dividend shares are looking some pretty reasonable returns out there. Maybe 7-8% sort of going forward. Some of them are structured as well tax efficiently in terms of pies. If you're interested in those options, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.